Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Tony Sierra, President and CIO, Caldwell Asset Management, will be joining us for the hour. In 30 minutes, we'll get Canadian retail sales numbers for February. Charles St. Arnaud, Chief Economist at Service, will join us to digest the numbers. And we want to hear from you this morning on First Call. Reach out with your questions on North American large caps, and we'll have Tony Sierra answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address, firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Shares of Intel are soaring in the pre-market. Look at that. At one point, they were up 31%, but right now, that was 27%. After the American company beat revenue estimates for the first quarter, the chipmaker also came in ahead of expectations with its sales guidance for the second quarter. CEO Lip-Bu Tan says the strong performance is being driven by rising demand for its core processors, adding CPUs are reasserting themselves as a key foundation of the AI era. Worldwide, inflation fears are growing on the news. Chinese exporters have started raising prices as the U.S.-Iran war puts pressure on input costs for certain goods. Companies say soaring prices for plastics and other oil-linked products are forcing them to pass those increases along. After years of cheaper Chinese exports helping hold prices in place, economists warn this shift could add to global consumer inflation. Shares of Procter & Gamble are up in the pre-market after the company beat sales expectations in the third quarter, driven by growth in the beauty category. The consumer goods giant saw the highest organic growth in more than a year, signaling steady demand for everyday products. P&G is also maintaining its outlook for its current fiscal year ending in June, but the American company now projects higher commodity costs. And now our top line story. The Nasdaq is on track for a fourth straight weekly gain, boosted by the impressive results from Intel. You can see what it's doing right now. It's up 1.25 in the pre-markets. The shares of the chip maker surging, set to hit its highest level after Intel delivered sales forecasts that shattered Wall Street expectations. Investors are also awaiting earning results from the rest of the Magnificent Seven next week. Now, for more on this, let's bring in our guest for the hour, Tony Sierra, President and CIO of Caldwell Asset Management. And Tony, thanks very much for joining us. It's been a good year. It's been a good year for Intel. Holy cow.
Tremendous turnaround strategy. You mentioned the CEO's name just earlier. He took over about a year ago, and he repositioned the company. It really started when the U.S. did their initial investment, I believe, last year around August. Mm-hmm. So you had the backing of the U.S. government investing something like $20 billion into the stock. Investors have realized, and what the new CEO did is, you don't just need GPUs, those graphic processing units, to run AI. You also need the CPUs, what Intel is famously known for.
But how do people not realize that? How does that sneak by? Oh, we can just get by on this. Well, no, we need the whole machine. It's like having a car with no gas.
Yeah, you've got a fancy car, and the GPUs are the fancy car, and you're so focused on that. Yeah. And then you realize, oh yeah, I need gas for this as well. So I think that's what is sort of left to the side. But the turnaround strategy, earnings are tremendous, and investors are rewarding the company now for it.
What has he done? Like, are there specific things that he's done?
Yeah, he's made investments outside as well. Intel, back around 2000, late 90s, they started making the chips and everyday laptops. To do that, you had investments outside of the U.S. So recently they bought back a company in Ireland to help facilitate growth out of Europe as well. So I think that's it. He had more of a global view versus just internal in the U.S., and he shifted his marketing strategy over to the data centers, the cloud computing programs that need the CPUs to run as well. So he shifted the strategy over to that side.
And this, does it look like this can continue?
Yes, I believe so. This has a long runway. By no means are we hit a top. Reasons why Intel busted back in year 2000 was because of the dot-com bubble, and a lot of companies went defunct. I don't think we're anywhere close to anything like that. We're not in a bubble by any means. So yes, I believe this has.
And with Intel specifically, they're looking solid.
Yes, because they're still designing new chips. They're launching a new one to make everyday computing use much easier, much more efficient, and that's in your laptops that they'll have. Remember, it wasn't too long ago that every single laptop had Intel inside. And that was forgotten, gone to the wayside because of these GPUs and cloud computing programs.
So they're back. I want to bring in SAP on this because their revenue growth beat analysts from cloud service, beat analyst estimates. It's the biggest software company in Europe, and they have a backlog at about 25%. What does that say about software and software companies? I mean, we talked about the SaaScopolis.
Yes.
SaaSpocalypse.
Yeah. Well, different sides. So SAP does offer cloud computing programming, sort of like the Amazons, the Microsoft with the Azure brand, and the Google's cloud platform as well. Service as a software is a little bit different, is where they're making companies more efficient, bringing in AI to develop more efficiency within the companies. The fear about these SaaS companies is that, well, instead of hiring a company to make my company more efficient,
we can do it ourselves.
We can do it ourselves with AI. Exactly that.
But the whole software, the software market, the software sector has taken a huge hit.
Yes, exactly, because
overall everybody's paying for it.
Yeah, and because of the fear of AI taking over these companies, right, making efficiency internal versus hiring someone outside. Earnings of ServiceNow was something we closely watched yesterday, a couple days ago, and that company is down about 17% since earnings. And it's a bit of a blow, even though they beat revenue fourth quarter in a row, it still came drastically down because they cited some issues with Iran, closing some contracts overseas because of that. But the outlook still looks promising. However, the fear is still long-term, we don't need you because AI, we can do it ourselves.
Yeah.
We're not a true believer in that story. You still need these type of companies, these service companies out there. So let's hopefully see a turnaround soon.
All right, and bigger picture, we got the Mag 7, I think, I'm not sure how many, I think a big chunk of them are reporting next week.
That's right.
I have to look and see. What are we expecting? Will there be anything big enough that'll satisfy people?
And you can say that with NVIDIA. I think the market's looking for them to double revenues at the same time this last year. And I'll go back to the first quarter where earnings were announced sometime in February for the Mag 7.
Yeah.
And even though they did quite well across the board revenues, a lot of the investors were like, hold on, you're spending a lot of money here. We want to see a return on invested capital a lot sooner. So companies like Amazon, Microsoft, Google spending billions of dollars on a quarterly basis, which ties up their free cash flow and potentially ruins a nice pristine balance sheet. So investors hit those stocks hard, sold them off, even though the revenue is quite strong. Same thing with NVIDIA. So I think we're going to see increased growth in terms of revenue across the board in companies, but we'll have to see how the investors feel. Keep in mind, shortly after the Mag 7 reported at the end of February last quarter, then we hit March with the Iran war, and the markets continue to take these companies down. They have since shifted since the beginning of April.
Yeah, NASDAQ's on fire right now.
Yeah, exactly. So let's see if the sentiment continues, but if it doesn't, and we see a pullback in any one of these stocks, I recommend a buying opportunity.
And are we going to see money coming back in? Because a lot of people are starting to rotate back out of tech, but you're going to see it coming back in. And who do you think, any indicators where it might come from?
The value sector did quite well, so people were rotating from growth to value, and we saw some names pop up that were deeply discounted. So I can see it coming from there. Maybe the energy sector as well, but the price of oil, at least Brent, is over $100 again because of the fear.
And
of
up
war.
again today.
Yeah, exactly. So if war subsides and the price of oil come down, some of these energy companies will be sold off and potentially gone into the tech sector.
Okay, we've got lots more to talk about. We're going to take a break right now, but up next, we'll take a look at the markets before the bell, and we'll see why quantum computing could be the next major leap in technology. It's easy to understand. Let's see how things are shaping up on the markets. We'll start with the U.S. futures. And you can see Dow, that's a wash right now. But the Nasdaq, look at that, responding to Intel's earnings report, which was rock solid. Nasdaq's up by 1.3%, S&P 500, 0.43. The Nasdaq, I think, is up for about probably 13% for the month. An insane run it's had over the last few weeks. Heading to the Asian markets, and a bit of a mixed bag. And we've talked about those concerns about inflation, and might be weighing a little bit on the CSI 300, but the Hang Seng up by a quarter, Nikkei up by nearly a point, and the CSI is up by 0.35. Over to Europe now. And again, mixed bag. FTSE 100, it is down by 0.3, CAC 40 by 0.45, and then the DAX going the other way in Germany, up by 0.18%. TSX yesterday, off slightly by 0.12%, so closing below 34,000, but it's hovering around there. We'll see what happens today on the news out of the Middle East. And some of the winners and losers from yesterday. Waste Connections up 8.25%. The Mullen Group up by 6.8 on their report. Discovery Silver off by 7.5%. And look at Curaleaf, 23, almost 24%. It was down after the news in the States. Reacted went up. Now it's people are pulling it back off the table. Taking a look at the metals. Gold, pretty much a wash for today. Silver, down for the week and up for today, but it's still below 77 right now. Copper hanging on to that $6 mark. It's down, but still above at 6.09. And Western Canadian Select yesterday finished up 2.5 at 74.85, just shy of 75 a barrel. And WTI now reacting to the news that we're hearing that Iranian leaders may be heading to Pakistan, possibly for more talks. We're not sure. 94.5 right now for WTI a barrel, down 1.4. Okay, quantum computing could be the next major leap in technology with the power to solve complex problems far beyond today's computers. Our guest says Canada's strong position in quantum research could shape long-term innovation and investment. We're back now with Tony Sierra from Caldwell Asset Management. Tony, we were discussing it off air. It's easy. You don't need to understand it. You just want to hear when it works, right?
Yeah, exactly. Like driving a car. A lot of us don't know how to use it. But in simple terms, today's computers can solve a problem binary. You know the answer is between 0 and 1,000,000, and it'll test each number until it comes down to the right number. And supercomputers can do that a lot faster. But quantum computing will test all the possible answers and point out the right one a much quicker rate. So it has a quantum ability. Yeah. So in that single bit, quantum bits to do so.
Do we know how much faster it is? Like, can they give you numbers on that? It's hard. It's faster.
Yeah, exactly. I like to say, let's look at medicine and drug discovery now. You're going to go through lots of trial and errors, many years to get something approved. Potentially, this can speed up the process quite sooner. And I'd say if it's 10 years, maybe it's down to 1 year or 2 years.
I saw a neat demonstration of how they work, and it's in a maze. If you were in a maze, and if you're a regular computer, you're going like this, you get to a dead end, you got to go back like this, then you go and find another one, you got to go back. And with quantum, it goes, and it just goes in every single direction and finds the other side.
Yeah, exactly.
And it just does it all like that.
Exactly. So it spirals out, and then it'll highlight the right answer for you.
And people, I think this is science fiction, but there are some out there, right? We're starting to see them.
Yeah, well, you're seeing rudimentary sources, and it's akin to the internet back in the late 90s when everybody was trying to develop it in their house or get it in their house, dial up and the noisy background, and the disconnect happened quite a bit. So I think that's where we are now.
And we still quantum.
Exactly. So we got so much runway. Yeah. Nowhere close to being mainstream and nowhere close for companies to make a profit on it. But Google Cloud Services, Amazon, AWS, and Azure by Microsoft, they offer what's known as QaaS, Quantum as a Service, and companies can use it and try to make themselves more efficient. But again, it's still in the rudimentary stages, and by no means are we making money off it.
But they are coming, and Waterloo, Ontario is one of the hotbeds in the world. Can we say that?
I'm going to say yes. U.S., when you look at quantum computing, you always have to look at the U.S. And
you wanted to talk about quantum computing, you can say it is. Well, I think it really is. I mean, it is a tech center, though. So.
Yes. University of Waterloo have made great strides on it, to the point that Carney announced a couple of weeks ago we're spending quite a bit on beefing up defense. Mm-hmm. They're looking at quantum computing components and how to expedite that, make that a lot more efficient, not as much costly, We're spending, what, $6 billion, I think was the total, and the U.S. spends that on one day with the Iran war. So we have to be a lot more efficient, and they're using components of quantum computing to make it so.
And are there companies that are rising to the fore, or coming to the forefront, or rising above the others here in Canada?
There is,
or do you want to? If we don't want to get into names, that's fine.
One, I think they're called D-Wave. I'm not sure if they're Canadian or U.S. But again, coming out of March, when the markets were down about 5 or 6% in the U.S. and 3 or 4 here in Canada, when we turned the calendar over to April, all of a sudden quantum computing got the hits. And companies like this D-Wave had done quite well. INQ, I believe, in the U.S. had done quite well, just about 30, 40% within a couple of days or so. So there was more talk, more rhetoric about quantum computing. That has since died down, but I just wanted to bring it to the forefront because it is something long-term. By no means, again, it's mainstream. Companies haven't figured out how to make revenues off it, but it is coming. I don't know if it's 10 years, 20 years, but it is.
Do you have any investments with them? And what are you looking for when you're looking at these companies? Because it's so off in the future, at least at this moment, it's off in the future, but sometimes all it takes is one change and all of a sudden it's here today.
Exactly. So we'll stick with the large cap. And as I mentioned before, it's the Amazon, Googles, and Microsoft. They have components figuring that out, but they're not making any revenues yet. Because they have billions of dollars on the balance sheet, worth trillions of dollars. We're sticking with them because if any breakthrough were to happen, they'll take advantage of it.
Yeah. But the smaller ones, it's still a bit of a risky game.
Yeah. It's sort of, if you want to venture into the tech stocks of the 2000s, just a forewarning before we do so.
But it's still fun to go down the rabbit hole of what it'll be capable of doing and the changes it will bring when it comes to us.
I'll give another simple example. I think you're trying to plan a trip in Europe and you have so much on your budget and you want to visit as many cities as you can, countries as you can. Quantum computing will outline the path for you within minutes. Potentially, that's what we want to get to. And when you factor artificial intelligence and quantum computing, so in my view, quantum computing is the next artificial intelligence. Put them two together, and then who knows what could be discovered. Let's say a cure for cancer potentially down the road.
All right. We're going to head to a break right now, but coming up next, we'll see what's on the radar for Tony Sierra, including the Royal Bank. Time to see what's on the radar for Tony Sierra, President and CIO of Caldwell Asset Management. Showing up right now, Royal Bank, old school.
Yep, earnings are coming out in about a month or so, I believe beginning of June. And the reason why, we want to look at the loan loss provisions.
Yeah.
Last year, second quarter earnings, Royal Bank put about $500 million towards loan loss provisions, or at least the performing loans, the part where people are still paying down their mortgages, paying down their loans, but it's anticipated that they won't be going forward, be able to do so. So we're keeping a close eye on that because then you'll have the trifecta that kind of cements that we're potentially in a recession here in Canada. You have unemployment reaching 7%, so higher unemployment. Interest rates, which I've been long fans should be cut. They're staying steady, if not potentially
I know we may
higher.
see even a hike potentially.
Yes, exactly. And then the trifecta was people not being able to pay their mortgages.
Yeah. And slow growth, too. The economy is not doing what it should be doing.
Yeah, exactly. So a lot of people, we can argue we're already there, and it's really the banking sector and the resource sector is driving the economy here in Canada. But that's why Royal Bank's on the radar for us.
And what will be a concerning number to you?
Well, last year they put towards $500 million towards that. Anything in that range or higher than that, it could cause a concern.
So the same, even if it stays the same, it's still concerning.
Yes, because a lot of mortgages are renewing this year. Keep in mind, 5 years ago, 2021, interest rates were very low, and now we're in a period a lot higher than they were. So you're renewing your 5-year variable mortgage or a fixed rate mortgage, maybe 2-3 times the amount you did before. Can you afford it given the inflation we already see in groceries, food, things like that?
So why RBC not, why not the other banks too?
Well, we'll keep a close eye on the other banks, especially Bank of Montreal that's been hurt in the past with loan loss provisions, especially in the U.S. Royal Bank is the biggest bank in Canada. And the mortgage market here in Canada is about $2 trillion. And out of the big five, Royal Bank owns a quarter of that. So slightly higher than their share of 20%.
All right. And do you have RBC?
Of course.
Of course.
Yeah. Long term.
Long term. Okay. Microsoft, we talked about it earlier. You're like a Microsoft.
Yes, we're always going to be Microsoft. And again, going back to the Q4 earnings, which were announced in February, earnings were quite strong across the board. They did have a little bit of miss in their Azure cloud computing program, but they provided a good rationale before it. They didn't put all their GPU chips towards the cloud computing. They put another business segment. So we think it's sort of a poster child. Go back 3-4 years ago, because Microsoft did an early investment in OpenAI, ChatGPT, they were rewarded being in the forefront of AI. Now, because of all this capital spend and people want to see return on investment a lot sooner, Microsoft's become the poster child for getting beaten up if you're not making revenues fast enough. So that's why we're keeping a close eye on Microsoft.
All right. And ServiceNow, another company we talked about, touched on briefly, but a little more about why you're liking it.
Well, again, they were beaten up a couple of days ago or yesterday because...
Feels like a lot have been beaten up lately.
Yes. And there's services as software, so that's SaaS apocalypse you mentioned before. If we start seeing a turnaround in ServiceNow, then the segment will follow. And it's been about a year now that these SaaS companies have been beaten up. We're not believers that you're going to be running your own AI to make your company a lot more efficient because you're so focused on something else. You're going to be continuing hiring these companies. Yeah. And I mentioned before, ServiceNow, for 4 quarters in a row, they've beat earnings estimates, and they have not been rewarded. Eventually, something has to give.
So,
hopefully soon.
But which one is it? Is it the beats that they're going to end that streak, or that people are going to go, you know what, this is actually a good buy right now?
Yeah, so we're hoping the latter, and the beats have happened for the last year.
Are we starting to see software and software as a service, I try to say SaaS, are we starting to see those companies adapt with AI, and are any of them convincing people that they're working with it and they can survive with it?
Yeah, well, they're all using AI.
Yeah.
I'll go back to ServiceNow.
But people aren't buying into it, though.
Well, the argument is, I'll go back to ServiceNow. They were originally created the chat bot. So you go on a website and pops out a little window and say, can I help you with anything? Because companies realized 80% of our questions are like, how do I log into my account? And you go into this chat box and the guides you the right way, right? So they're already incorporating AI to making companies more efficient. So AI has been incorporated already within these companies. And again, the concern is your company, instead of hiring ServiceNow, I'll figure it out. I'll hire one person to figure out AI and do all that work for us.
And so why? And is ServiceNow, is that big, or is it just the leader?
I think it's an example of revenues being strong, guidance being quite good, although this past quarter's guidance wasn't as strong because they recently took over a cybersecurity company, so that's going to weigh in on their balance sheet going forward. ServiceNow, for let's say 3 of the last 4 quarters, earnings quite strong, guidance quite strong, and not being rewarded. So that's why it's ServiceNow.
Any other companies standing out like that in a similar boat?
Yeah, you got to look at in Canada, Shopify, big company here, definitely a SaaS company, and the other one, Constellation Software.
Yeah, it's been really beaten up.
Really beaten up, and they also had some issues internally. CIO leaving last year, but those companies could potentially be a new wave going forward, potentially.
My favorite theory with Constellation is it might pivot and just become a completely different company.
It can.
Just like Berkshire Hathaway, right?
Yes.
It was a textile mill.
It used to be a textile mill.
So, and if they see they have to make a pivot, they have to make a pivot.
Yeah, and companies do that. Intel, for example, we talked about it earlier.
All right. On that note, we got to take a break, but we'll be back after this. We're going to be looking at the Statistics Canada's February retail data, and our phone lines will open soon. Call us at 1-855-326-6266. We have breaking economic news for you. We're getting in the latest retail sales numbers for February, and they increased 0.7% to $72.1 billion in February, but analysts expected 0.9%, and if you remove automobiles, it was 0.5% month over month. The survey was about 0.8%. So here to provide some in-depth analysis is Charles St. Arnaud, Chief Economist at Service. Charles, thank you very much for joining us.
Good morning.
Off what the analysts were expecting, but within the realm still?
Yeah, well, most analysts were expecting plus 0.9. That was what the preliminary number was when in the previous release. So it's hard to diverge too much from that. But when you look at the details, it's roughly as we were expecting. So still robust retail sales in February. It continues to show that some resilience on the consumer side. As expected, most of it was driven by stronger motor vehicle sales, but also when you look at core, so removing motor vehicles, removing gasoline, it was still quite solid at plus 0.5. And then when we look, the preliminary number from March continues to suggest some more resilience, but then we have to be a bit more careful, is that March will be distorted also by a price effect. We've seen gasoline prices increase quite significantly over the month, so that could be biasing in some ways the increase in retail sale in March slightly to the upside.
Charles, a question on interest rates. What level, what retail sales, does it have to be a negative number for, say, the Bank of Canada to consider an interest rate cut going forward?
Well, I think it's not necessarily just retail sales. I think when we look at the Bank of Canada, the way it thinks of the economy, it's more generally how much weakness are we seeing? And actually, when we look just at the retail sale number, it actually suggests that before the hit from higher energy costs that we've had since the conflict in Iran, is that the consumers in Canada were actually very resilient. We're showing some relatively healthy spending numbers in the first quarter of the year. So just on that, I don't think there would be any justification for the Bank of Canada to cut rates. Where the bank will be more concerned is on the labor market side, where we've been continuously seeing some weakness. It's still not, it's more a stalled labor market as I would consider it. I think where they are a bit more worried is that if the economy slows and we start to see layoffs, that's when they will start to be a bit more worried, and that will be what would trigger a rate cut. But we also have to take into account that there's also upside risk on inflation coming from energy prices.
And where is this resilience coming from? I mean, we've talked about inflation, we've talked about gas prices possibly going up, and concerns about the economy in general. Yet people are still spending. Where is that resiliency coming from?
Well, I think this different part is that we had seen in recent years purchasing power of households stagnated significantly, like in 2023, 2024, and most of 2025. But as we got into second half, we started to see some improvement in disposable income. Inflation was under control. So you had a bit more of consumers were feeling a bit more at ease to, in some ways, start respending. There's also some wealth effect from very positive returns on investment over the past year. That kind of helped. And in some ways, it's kind of provides some better momentum starting 2026 and to kind of absorb the shock we've seen since the conflict in Iran started.
And Charles, what do you think March data going forward, given the price of gas really increased over the month of March?
Yeah, and that's where the preliminary number is interesting, is that it continues to show robust spending in March. But again, that's a nominal number, so it includes the price effect. So how much of it is driven by higher gasoline costs at the pump? That's a question. But considering how high it is, I feel there's still some positive increase. I think it's more what happens in April, May, and maybe June if we continue to see gasoline prices so high, because that will have a significant impact on consumers' purchasing power in the coming months. And that's when we'll start to see some reduction in discretionary spending that could start to feed into weaker retail sales.
And will that have an impact on motor vehicles and parts dealers, those numbers there? Because I mean, it's interesting. They were pretty solid. Is there any reason why we saw a fairly solid increase in automobile sales?
Well, we've seen a bit. A part of it is that improvement in consumer confidence that we've seen late 2025, early 2026, kind of leading them to be a bit more ready to go into those big purchases. Also in February, we have to remember we had the return of the federal rebate on EVs that might have also pushed motor vehicle sales. We know, however, that there's indication that motor vehicle sales were relatively weak in March. So we'll see how that continues. Just is it payback from a strong beginning of the year, or it's really something more where consumers are changing their behavior because of the uncertainty and the loss in purchasing power.
And I'm just looking from province to province. Quebec, 1.7 was the increase. Montreal itself, 1.9%. Any reasons why is Quebec so rich right now?
Well, one of the things that we've seen, and that has been a trend in recent years, is actually the economy of Quebec has been relatively solid and relatively strong, despite being hit by the trade war, and all those and so forth. So it has been relatively more resilient than, for example, Ontario, which obviously being the heartland of manufacturing, being so much geared with trade to the U.S., has been a bit more hit harder by all the tariffs. So that probably explains some of the difference there.
And then going the other way, Alberta down by 1.9, and that big part of that was decreased motor vehicle parts dealers. What's any idea for reasons for that?
Well, Alberta, I know because being my home province, is that we see motor vehicles to be extremely volatile, like more volatile than in the rest of the country. And also we have a lot more fleet vehicle and all that. So it kind of follows a bit more the investment cycle. So I think we've had relatively strong motor vehicle sales at the beginning of the year. So that's probably why we have some payback now. But also we have to take into account that one thing that is kind of in some ways underappreciated sometimes in the rest of the country is that when we look at purchasing power, actually purchasing power has underperformed more in Alberta than the rest of the country. That's because wages have underperformed, wage growth has underperformed the rest of the country in recent years. So that's kind of also putting a bit of pulling down retail sales somewhat.
Okay, we have to wrap it up there, but Charles, thank you as always for joining us.
Thank you for having me.
Charles St. Arnaud, Chief Economist at Service. Shares of Intel are soaring in the pre-market after the company beat revenue estimates for the first quarter. Chipmaker also came in ahead of expectations with its sales guidance for Q2. The CEO of the American company says the strong performance is being driven by rising demand for its core processors, adding CPUs are reasserting themselves as a key foundation of the AI era. Chinese exporters have started raising prices as the Iran war drives up input costs for certain goods. Companies say rising costs for plastics and other oil-linked products are forcing them to pass those increases along after years of cheaper Chinese exports helping hold prices down. Economists warn that the shift could start adding pressure to global consumer inflation. The federal government has approved a major natural gas expansion project in British Columbia. Ottawa says the $4 billion Sunrise expansion program will add capacity to Enbridge's West Coast pipeline system, helping meet growing energy demand in the province. The government adds construction will begin this summer, and the project will support LNG exports, create jobs, and generate new tax revenue. Looking at the U.S. futures right now, and you can see the Dow off slightly, but the big one is the Nasdaq, of course, reacting to Intel's earnings report. It is up more than 1%. S&P 500 up by 0.3. Still ahead, we'll discuss whether big tech has made investing look simple or just easier than it really is. And our phone lines are open. Tony Sierra is taking your questions on North American large caps. Call us at 1-855-326-6266. You can also email us, first call at bellmedia.ca. A strong run in big technology stocks and easy-to-use trading apps have shaped how many younger Canadians experience investing. As wealth begins to pass to the next generation, concerns are growing about risk and diversification. Let's bring in Tony Sierra from Caldwell Asset Management for his take on this. Tony, what percentage? Do we know a percentage of what people are self-investing?
I'm not sure of the percentage,
right?
But I find, generally speaking, more in the younger crowd.
Yeah.
Having a lot more conversations with students and potential future employees, and asking questions on how they pick stocks and the rationale behind it. And sometimes the rationale is not as well thought of as, well, why not buy NVIDIA? It's going up all the time. Right? And that's the fear. And over the last 10 years or so, you've had a concentrated number of technology stocks just drive performance, magnificence.
And makes it look easy, too.
Well, exactly that. And so the risks that I grew up on, the stop losses, the understanding drawdowns, that seems to be negated because NVIDIA will just go back up when it's down.
Yeah, buy the dip. But eventually there's going to be a dip that doesn't,
well, if you
for a little while at least.
Yeah, if you live through the dot-com era, that dip lasted a few years, and then 8 years later, you went through the financial crisis, another drastic drip, and that dip lasted even longer. So there was a period of about maybe 12 to 15 years where you're just hovering around zero as a return, and you're happy with it. But we haven't seen that over, say, the last 10 years. And again, I mentioned before, Magnificent Seven driving performance last 3-4 years. Before that, remember the FANG stocks, which same variation of the same 7 stocks. But so over the last 10 years, it's sort of been diluted in terms of these returns. And a lot of do-yourself investors are very tech savvy, so they're concentrating their wealth there.
I was talking about friends who have sell prices and things like that, who are investing on their own, and they have their bottoms and everything, and they're removing emotion. I think the biggest thing is trying to remove emotion, right?
That's exactly it. Emotion will drive the markets, and you sort of want this robotic view at the markets and say, okay, hold on a second here. Should the stock be really down this much? What's the rationale behind it? And do you want to continue to hold it? On top of that, because it's so concentrated returns, people are looking more equity, big tech stocks. You have to look at diversification, not just stocks themselves and not just big tech. You look at bonds, cash, they drive a little bit of stability of a portfolio, but on the other side is the alternatives. Private equity, hedge funds, those are different return drivers than what you can get in the stock market. And if you're missing those components, you're just adding more risk to your overall portfolio, trying to get the same return as if you had a combination of all 4 of those components: cash, fixed income, equities, and alternative investments.
And people in the business, you must be feeling pressures from these people investing on their own.
Yeah, so it's something we adapted is you've got your core portfolio, which is well-rounded, which fits your risk profiles long-term. And then you have this opportunistic component. And that's where we dabble into, say, if you want to hold a NVIDIA high-tech stock or a quantum stock. But we make sure that when we factor the whole risk analysis of total portfolio, this sort of satellite component can't affect your total portfolio. It doesn't have a bearing. So we restrict the investments to a couple of percentage points here and there.
And what I just saw a story that came across. There was one of the special forces guys who went into Venezuela from Maduro has now been charged because he did the predictive markets on that. What are your thoughts on that? Judging by the way you're reacting to that story, I'm going to say, well, you don't think it's a good thing.
I'm happy it's not legal here in Canada yet. Yet, just like gambling wasn't, sports gambling now it is. So poly markets, exactly that, are prediction markets. Let's bet who the next president will be, and put $5 on, see if we get a hit. That's gamification of stocks. And if we see that, then everything's out the window. Everything I learned about portfolio management is just you're betting on everything, and now stocks have become a bet as well.
Well, I mean, they are a bet to a degree with day traders. Has that not put pressure? And this is.
Again, you're absolutely right. That's always been done. But then there's the other side, my side, portfolio management still has a way of doing it, looking for well-rounded companies, looking across the asset allocation to build an appropriate portfolio for a client based on their risk tolerance and expected returns.
But I mean, is it not something with the predictive market? I mean, somebody has to lose. I mean, I guess everybody could win in theory if they all put the same bet, but they're only going to win a minimal amount. Is it that old adage, the stock market has more to lose than you have to invest, like for some of these people?
Potentially.
When you're playing that risky, eventually you might end up losing?
Yeah, well, the concern is, I did mention, you mentioned before, this inheritance tsunami. Many baby boomers are approaching their 80s, and they built the wealth coming out of the wars, all the industrial businesses selling, and that's going to be passed down to the next generation. And if everybody's on the phone looking for double or tripling their money and then potentially lose most of it, then that could be concerning. All this wealth that's been built up by the previous generation could potentially go to the wayside.
Okay, we'll leave it on that note there. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including First Quantum Minerals. All right, let's take a look at some of the notable analyst calls and recommendations. First Quantum Minerals was upgraded at JP Morgan to neutral from underweight, a price target of $37, up from $28. The firm says it sees upside risks to 27 and 28 estimates if an earlier agreement to restart the Cobre Panama can be achieved. National Bank Financial raising its recommendation on Sun Life Financial to outperform from sector perform. The analyst saying the upgrade reflects increased confidence in the turnaround of the company's U.S. segment financial performance, notably the stop-loss business. And finally, Scotiabank upgrading Magna to outperform from sector perform, price target $72, up from $69. They are saying wealthy consumers are propping up the auto market, which should be a tailwind to mix, as the firm believes more affluent customers tend to buy higher content pickup trucks and SUVs. When we come back, Tony Ciero takes your questions on North American large cap stocks. That's on First Call. Time for First Call and first email, and that one comes from Umesh, who says, I would like to get your opinion on comfort systems as a way to play data center infrastructure. Is this a good entry point, or should I wait for a pullback? Tony.
A good question to start. When I was on here in March for the market call, I had a question on the same company, and I said continue to buy it.
Yeah.
If we see any decrease in spending by the big mega cap stocks on the infrastructure build, then that's your potential to start selling off. But I would still say buy. Earnings will come out next week for most of the Magnificent Seven.
Yeah.
And I'm pretty certain we'll see continued spending on AI data center built out. And comfort system plays right along, providing the heating, ventilation, and air conditioning for. You got to keep these data centers cool, or they'll overheat.
Yeah, it's the, what is it, picks and shovels, right?
Exactly.
Picks and shovels.
That's what we say at our firm, picks and shovels.
Those are the things that people need. From Elvio, this email, can I get your opinion on United Health for a 3 to 5 year hold? It took a big hit. Was it yesterday or the day before?
Well, no, actually it did well with earnings. It went up quite a bit yesterday, I believe close to 10%. But it has taken a big hit since around, well, let's go back at the end of 2024. The CEO on the insurance side was murdered in New York. And that started, obviously, not good for the company. An unfortunate incident there. And then fast forward to about June, July 2025, the CEO of the overall company just up and left. And that gave signs that, okay, something's going on here. Plus, there was some rhetoric that they were misinterpreting how much revenues they can have back from the government grants. So there was concern there, and the stock really took a dip. But earnings were a little bit promising yesterday or the day before. Stock has rebounded. This could potentially be a good 3 to 5 year hold, especially at these levels.
Well, it feels like it's been a struggle for a long time, and it's something that's not going away. So it's a company that's not going away. So maybe it is time.
Exactly. It's a large cap company. We don't see it going to zero.
All right. Let's move on to an email from Paul and your thoughts on Canadian Natural Resources, CNQ.
Yeah, one of Canada's leading oil and gas companies. What's done quite well, obviously, with the war in Iran and the price of oil increasing. Pays a very healthy dividend. We might see a pullback if the war stops and the price of oil normalizes down to about $60, $70 where it was before.
Do you think it's going to drop down that low? I mean, I've heard some reports saying we're not going to see it below 70 for a long time, if at all.
Exactly. So I would still be a big holder of CNQ long term. Its dividend alone will keep that going. And again, it's one of Canada's largest companies. So a good investment to have as part of your well-rounded portfolio.
And with Canadian oil, the oil industry, could this be the impetus finally that we see a push, people looking at Canada as an oil source? Well, I mean, we are one, but more of that, it's that reliable one.
I hope so. I hope so. We do see some potential foreign investors coming into Canada because of our oil resources. But I like what was announced before, where it's been approved now to build a pipeline to BC. And what we should be doing is looking also building pipelines to the ports of BC to ship over to Asia and Europe and even in southern Ontario.
I mean, they're trying.
They're trying. We need approvals, but I think that would be a great catalyst to get foreign investors back into Canada.
I mean, I guess is the big concern Canada could be its own worst enemy on this one?
I think we're already there, yes.
Although, I mean, with the government seems to have changed. I mean, it's definitely, the Liberals have definitely shifted more center, even some might argue even almost center right. Will that be enough to push those things through?
Well, they did get the majority a couple of weeks ago, and hopefully that is enough now to push these projects through. You're still going to have opposition, rightly so, wrongly so, but hopefully it's enough to get some of these projects going. As announced earlier, you're going to create jobs, you're going to create tax revenues, and hopefully that's a more sustainable economy. Again, look at the U.S. I know what's going on with the war. I do not agree with it. But look at the economy itself. You have these big tech companies now worth trillions of dollars. Well, what are they doing? They're building infrastructure. So you're having other sectors of the country participate in that build out, the picks and shovels, as you mentioned before. Why can't we have something similar? Maybe it starts with the energy and the resources.
Tony, got to wrap it up there, but thank you, as always, for joining us. Tony Sierra, President and CIO of Caldwell Asset Management. That's it for us. Andy's up next with the Open. Trading gets underway in just a few minutes.